What's up, everybody? It's me, Mario D here, aka Dr. Real Finance, and today we're going to do a quick little video. A couple days ago, I posted up a post stating why I feel like the FHA loan is not only my favorite, but also why I think is the best option for first-time home buyers, especially when they're getting into their very first home. And I thought I would come out here to give a little bit more context and give you a little bit more information as to why it is 100% my favorite option to go with. So that being said, let's get started with the video right now.
Attention all first-time home buyers, I've got some exciting news just for you. Are you ready to embark on this journey of buying your very first home? Well, I've created something special to guide you every step of the way. Introducing the First-Time Homebuyers Roadmap. It's your ultimate companion on this exciting adventure, and guess what? I'm giving away free copies exclusively to my amazing audience. Well, this roadmap details the home buyer's journey to help you navigate the entire home buying process with confidence. From budgeting and financing to finding the perfect home and closing a deal, it's all in there. To get your copy, just visit drrealfinance.com/roadmap or click the link in the description below to claim your free copy. It's my way of saying thank you for being part of this incredible journey. So, trust me, this roadmap will be your best friend as you embark on this journey towards homeownership. So don't miss out on this opportunity. Grab your free copy today, and let's make your dream of owning a home an actual reality. Now, let's get back to the video.
Anyway, so number one, you can actually acquire a multifamily property with an FHA loan. Generally speaking, you can purchase up to a 4-unit with the FHA loan, aka you can actually live in one unit and rent out the other ones with a down payment of as little as 3.5% down. This is great because not only are you basically being able to have a home of your own, but you're also generating that investment and rental income that you can then utilize to increase your savings position and start building that investment portfolio for real estate in the future. The great thing about this is every year, the idea that you can stay in the home for at least 1 year, you'll be able to then refinance out of that FHA loan, put in the conventional loan, and then go use the FHA loan process all over again and go get another multifamily property and do it once over and over again. Now, generally speaking, you can do this up to a max of 10 times now as of 2021. They actually changed the rules. Before it was only you could do up a max of 4 times, but this is a great way for you to start building up that rental portfolio. Now, number 2, the FHA loan has actually reduced the monthly obligation that you have to pay towards PMI. PMI being primary mortgage insurance. What PMI is basically an extra fee tacked on to loan receivers for buying a home that basically says because you're putting down less than 20% down on a home, we're going to have the government's going to back that loan with an insurance policy that you're basically paying into up to the point where you get up to that 20% threshold. Now, the great thing is the FHA requirements have lowered the amount that this fee actually is. So that is great for you because that basically makes a home a lot more affordable for you. And what they won't really tell you, but I'll give you a little bit of tip here. If you continue paying on that home regularly and get to the point where you increase, you basically have opened up 20% of equity in that property, you could then actually go back to your loan officer and then have them actually request to have that PMI obligation taken off. But it's a little tip. Most times you can get that done, taken care of within the next 5 or so years. So keep that in mind as you decide to go forward with getting a FHA loan. Number 3, you can actually obtain approval for an FHA loan with a credit score of about 580. Now, while the federal government is stating that yes, you should be able to get approved for a loan for it with that 580 credit score, most lenders are not going to lend to you at the same terms at that low of a credit score rate. Generally speaking, I would suggest being somewhere at minimum around the 630, 640 mark. And if you have questions on how to get there or you don't know how to get there, we can discuss that in a later video. But I do offer help in getting to that regard. Okay, number 4, you actually have the option to include rehab costs in the loan amount with an FHA loan. This is basically what I did with my very first property. If you don't know about this, I purchased a home for about $40,000. Mind you, this house was basically run down. It was a complete gut job, but it was in a great location, had great bone structure, and quite frankly, I knew that if I pumped money into it and making it beautiful, it would be worth more than the money I put into it. So what I basically did, I bought the house for $40,000 from the original owner, and then I actually refinanced that home into an FHA 203K loan, 203K loan being the name for the rehab loan. And they basically gave me about $120 extra thousand dollars to pump into this property. So to pump into this property and pay off the old lender. So all in all, I think I was basically into the home for about 130, but they basically funded the entire repair cost for it. That being said, when everything was all said and done, the house became I'm in it for about 140. But at the time, the house ended up being reappraised when the work was done for about $300,000. It was a great option for me. I would definitely suggest it because it's a great way of getting into a home that might not have all the bells and whistles that you want. But with this option, you'll be able to turn it into the very home that you dream of. So while most people say go for these turnkey homes or go for homes that are already move-in ready, with an FHA 2 or 3K loan, you don't necessarily have to worry about going into homes that are just at the top of what you want, because quite frankly, there's going to be a lot more competition in those homes because they are move-in ready 100%. Okay, so let's see here. If you going back to number 5, if you decide to go with the FHA loan with and use it to purchase a multifamily rental property, if you decide to move into a secondary rental property, technically with an FHA loan, you could actually count the future rents that you will collect in this new property as part of your income to determine your qualifications and eligibility and for how much you actually offered to purchase that home. Yes, you can actually use future market rents as future income to get approved for a multifamily home with the FHA loan. This is a great one. Definitely keep that in mind if you decide to open up your rental portfolio. So next we have number 6. FHA interest rates are typically pretty low. More often than not, they're about equal to or maybe sometimes a little bit lower, depending on certain circumstances for FHA loans versus conventional loans. Now that being said, obviously there's a lot of factors that might go into this, but more often than not, there's a good chance that your FHA loan interest rate will be lower than your conventional loan interest rate because they're trying to make, with FHA loans, they're trying to make the process of getting into a home a bit much easier for first-time home buyers to get into homes and make it more affordable for them. Right. So, that being said, we're going to part number 7. Now, part 7, an FHA loan allows you to actually opt in for a 2-to-1 buy down, which effectively grants you probably never heard this before, but it basically grants you a below market rate interest rate for the first 2 years of owning the home. Now, obviously, we need to go talk to your lender specifically about this possibility, this option, but essentially, it will lower your first 2 years worth of payments on the home, therefore making the transition from renting to becoming a homeowner much easier. The idea being the first 2 years is going to be at a much lower interest rate, thus lowering the amount of your monthly payment, but on year 3, you'll go back to prevailing interest rate in terms, more in line with the rest of the market. This is a great option to make being able to get into a home much easier for you, and definitely something for you to check into. But once again, get in touch with a local lender you can work with to learn more about the programs that they may offer in this regard. Number 8, the FHA loan guidelines are a lot less restrictive than conventional loan guidelines for qualifying for a mortgage. The FHA loan process was designed to help make the transition into home ownership much easier for borrowers that may not be 100% ready to do so. That's a bad way of putting it. They may not be at the top credit-wise, income-wise, or resource-wise, right? The FHA loan basically makes the process of getting into a home a lot easier for those first-time home buyers, which is why I said it's a great option for first-time home buyers, because you don't know what you don't know, unless you buy freebie, the first-time home buyers roadmap. But more about that later. Number 9. Depending on the lender, you can actually complete the closing process in as little as 21 days. Now, obviously, to do that, you would need to have all your ducks in a row and a lot of paperwork streamlined and ready to go. But I know of a number of lenders who are able to get you in and out of the home buying process in as little as less than 30 days. Typically speaking, the home buying process could take anywhere from like 45 days or 60, depending on how fast you find your home. But there are lenders who are able to make this process happen a lot faster for you, for those that are worried about having to pay rent for too long and to versus paying rent and having to pay for a mortgage in the same time frame. Most often than not, that doesn't really happen, but more on that later. And finally, number 10. In the event of the mortgage rates dropping in coming years, because I don't know if you noticed, in the last 2 years, between the years of 2020 and 2023, our interest rates have been we've already in historic lows even to this day. But between the years of 2020 and 2023, interest rates were at rock bottom due to the pandemic. I'm not sure I can say that, but it is what it is. Due to the pandemic, interest rates went rock bottom, and I know a lot of people were worried. A lot of people did a huge refinance boom to basically lock in those lower interest rates for current homeowners. And I know a lot of buyers are worried, like, oh, I missed my opportunity to get in at these really low interest rates. And in our industry, we have a saying: marry the house, just date the interest rate. Because at any point when the interest rate decides to go down, you can obviously refinance into that lower interest rates, lowering your typical down payment, and possibly, if you need it, able to tap into the equity of the home that you built in, that you paid over, that you've been paying into since the day you bought it, which is great for emergencies, savings accounts, you name it. It's extra money there available for you for not to be used stupidly. Don't use it to go buy a car, but in the event that some emergency comes around, it'd be a great option for you. The great thing about this is you can actually take advantage of an FHA streamline refinance, which is almost like a quick turnaround a quick turnaround option for you, because you've been paying on time, you've been doing a good job of maintaining the parameters of that loan, and because you've been doing such a good job, they will push your refinance along much faster, getting you access to that interest rate to lock it in faster for you, as well as give you easier access to the capital in your home. But yeah, that being said, that is about it. Like I said, it's been a little bit longer video. I like to keep these things somewhat short, but if you have any more questions, once again, reach out, click the link below, and tap in with my first-time home buyers roadmap. But that being said, I will need to get out of here and pick up my kids. So, Dr. Roll Finance out. Love you. Peace.